Welcome back to the Easy VC Brief. I'm your host, Max von Polnitz, and this is your weekly espresso shot to deep tech venture capital news. Today, we're probably doing one of many episodes on quantum computing because June and July just handed us the perfect trio of stories. It's one IPO and two startups selling nearly the exact same idea at wildly different check sizes. At Foothill Ventures, we have yet to make a quantum bet, but are directly exploring the space. And as a result, I thought these sort of podcasts could be interesting, not just for myself, but also for you. But before we get into the deals, let's do a quick one-on-one because quantum computing does get thrown around a lot, and I think it's worth explaining. So quick primer. What is quantum computing actually? A regular computer, the laptop, the phone, the server farm running your favorite app, does everything with bits, right? A bit is either a 0 or a 1, full stop. Every calculation your computer has ever done is just an enormous number of zeros and ones getting flipped around really, really fast. A quantum computer swaps the bit for something called a qubit. Here's the fun anecdote that I've come up with that actually helps explain it. Think of a regular bit as like a coin lying flat on a table. It's either heads or tails, no in between. A qubit is like that same coin while it's still spinning in the air. Until you look at it, until you measure it, it's kind of both heads and tails at once, a blend of possibilities physicists call superposition. The second you measure it, it collapses down to a plain old 0 or 1, just like a coin landing on the table. The magic is what you can do with a bunch of qubits before you look. They can also get entangled, meaning the state of one qubit instantly affects another, even if you tried to separate them. So chain enough of these together, and in theory, you could explore a massive number of possible answers to a problem simultaneously. And it's instead of checking them one by one every time like a normal computer does. That's why quantum computers are so exciting, but for very specific problems. Breaking certain kinds of encryption, simulating molecules for drug discovery or material science, or even optimizing massive logistics networks. And look, the technical piece, the entire industry's biggest headache, is that qubits are incredibly fragile. They lose their quantum state, a process called decoherence, from almost any stray vibration, temperature change, electromagnetic noise, which is how many qubits matter, way less than how many usable error-corrected qubits exist, and why building a computer that can actually hold a calculation together long enough to be useful is still physically really, really hard to do. All right, primer over. So let's jump into some of these deals. Story one, Quantinuum goes public. On June 3rd, Quantinuum priced an IPO at $60 a share, $5 above the top of its range, and raised $1.68 billion. Started trading the next day on the NASDAQ and closed the day around a $15 billion market cap. For context, that's Honeywell's quantum spinout. The company built from old Honeywell Quantum Solutions and Cambridge Quantum merger back in 2021, making its debut on Wall Street as basically the biggest, most established name in the space. Demand for the deal was reportedly 20 times oversubscribed. That's 20 times. Now in 2026, that's meme stock energy for a company that in its most recent full quarter did like $1.3 million of revenue. So at the $60 price, Quantinuum was trading at like 453 times its 2025 revenue. And that's really a multiple that only makes sense if you believe fault-tolerant, error-corrected qubits are coming on a real timeline soon. Because right now, honestly, investors are pricing the roadmap, not the P&L. I find it personally super speculative. Given that even us as seed investors are still trying to question all the timelines, I just don't understand how you can do that in the public markets. Story two, Sandbox AQ raises $500 million to sell insurance, not compute. This is an Alphabet, so Google, spinout founded by Jack Hidary. And in mid-June, they closed $500 million round specifically to help banks and governments and pharma companies get ready for a threat that truly doesn't exist yet. It's called Harvest Now and Decrypt Later. The idea that adversaries are literally stealing encrypted data today, sitting on it and waiting for quantum computers to get good enough to crack it open later. Here's the fun part. Hidari pointed out that the average bank needs 5 to 7 years just to migrate its cryptographic infrastructure. So even though nobody has a quantum computer yet that can actually break bank-grade encryption, the migration timeline alone means work needs to start now. So what do? So let's look at Sandbox AQ's product, Active, I think it's called ActiveGuard. Does cryptographic discovery and inventory across an entire IT stack, then helps orchestrate a swap to post-quantum NIST-approved algorithms. Which matters because most companies don't even know where all their vulnerable cryptography is hiding, let alone how to replace it without breaking production systems. So it's a huge round, and oftentimes, like a competitive advantage in these sort of rounds can just be a founder's ability to fundraise, get first mover advantage, and they certainly have that with a strong balance sheet to build on. Definitely one to watch. Story 3, PQC, same thesis at seed scale on the other side of the world. If Sandbox AQ is the $500 million version of this idea, PQC is the $3.9 million version. Singapore-based, they closed their seed round in mid-July, co-led by SG Innovate and Lotus One. It's one of their, I think they raised like 2.8 million prior back in 2022. But it's basically the same idea. Harvest now, decrypt later, problem, same crypto agility pitch, just built for a completely different market. Critical infrastructure providers, government agencies, and financial institutions across Asia. In further research, I learned that one of their backers put a hard date on this, right? Global regulators are pushing critical systems to complete post-quantum migration by as early as 2030. That's a compliance calendar and why you're seeing venture investors diving into this. It's not really like a technical problem per se. It's actually, first and foremost, a regulatory and kind of mapping problem, right? To understand in the enterprise where your vulnerabilities lie. So, as you guys know, startup is really all about timing, right? So timing is about 50% of success, and a strong tailwind can drive that. So here's the real takeaway for anyone trying to figure out where to put capital in quantum right now. The hardware layer is generally not ready. There's still opportunities there for sure. Everyone's moving fast, Quantinuum, IonQ, the whole field, but realistically, we're looking at 2028, 2029 before quantum systems can demonstrate real commercial application value at scale. That's not pessimism, that's just the physics and the manufacturing timelines talking. But Sandbox AQ and PQC sitting 3 orders of magnitude apart in check size are proof that you don't have to wait for the hardware to find an entry point. The insurance and compliance layer around quantum, protecting against threats that are coming, that kind of works, right? It's fundable today at basically any stage in basically any geography. I mean, ultimately, we're also going to take a look at the overall application layer once the hardware is ready, but it's again a question of when to jump in. So that's your special shot for this week. I'm Max von Polnitz. See you next time on the Easy VC Brief. Please like and subscribe. Let me know if you want me to cover any other topics next week. As always, keep building.